Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Ainslie McLennan, manager of the Janus Henderson UK Property PAIF. Hi.
Hello.
So Brexit, of course, is dominating headlines. And in the residential property market, particularly in London and the South East, we have started to see negative implications for property valuations.
Yeah.
I suppose the key question is this translating into commercial property?
Yeah, so commercial property's actually had a pretty steady time. Over the last 12 months, the PAIF itself had done 8.7%. So I think we've delivered not just a steady return, but actually a bit of capital growth. So it's not been the same as the residential market. Saying that, we've done quite, as a fund team, done quite a move away from central London offices, which I think were always forecast to have a bit of a decline. That decline's not come through as yet, and has been, I think, underpinned maybe by that overseas investors still taking the benefit of the currency story to enter into sort of that trophy style asset. But, I feel probably slightly more sanguine about that part, that London story and that London part of the market, because we have done such a strong downweight. I think that there, of course, is a shift taking place in the residential market, but we're really looking at quite a flat year for the UK commercial property story, and that's really because the income story is so locked in and secure. We have still got the benefit of a very long lease structure, and the average lease length on a fund like ours is 10.3 years. It's got that much more long income style feel to it, and that holds a value where the residential market operates very differently, and where it is let very short leases. And capital values had got quite steamy in that part of the market anyway, so maybe there was a rebase to come through on residential regardless of that Brexit story.
And I think that's an important point to make, because when we've been talking over the years, even pre-Brexit, you've always been careful to articulate, to differentiate between London and the South East and the rest of the UK, because they do have different drivers, those markets.
They do. The demographic's different, the workforce is different in terms of the diversity of the business base, and that can be useful. When we're looking across the sort of more regional plays, we very much like logistics and distribution. It lends itself naturally through the road infrastructure and ports to lots of different locations around the UK, and that's doing very well for us and has really been last year one of the top performers for us, and actually for the past 3 years. The alternative sector as well, I think it's important to look at demographics. We're very all caught up in the sort of fog of Brexit, and it's frustrating for all of us. But if you look at sort of long-term trends that we can be invested in, if you look at healthcare, if you look at care homes, there's a very strong demographic story for being invested in the right locations in there, and they're often regional stories. So we often take these sort of regional positions in different parts of the market, not that classic office market. In fact, we have downweight to 0% in regional offices, just as a sort of batten down the hatches. If Brexit does get tested, I think that tenant base would be tested. It would be difficult to keep buildings fully let. It would be difficult to push rents forward. And so, as an income obsessed fund, we shouldn't be taking risks around that. So we're looking much more where we are regionally placed, long leases, and much more of that RPI style lease structure. About a third of income currently coming from RPI or fixed kickers in the lease structure across the portfolio. And
you did mention it earlier, currency.
Yeah.
Obviously, one of the unintended consequences of Brexit is the fact that UK assets, not just property, now do look more attractive to international investors. Is that something that you are seeing within the fund?
We have sold, where we've been selling assets, we have sold to overseas investors, but that's not a new story. We've always sold to UK and various different overseas jurisdictions, so that's not news. I would say the slant of where the money's coming from is slightly different. So, that sort of Hong Kong Chinese money dominating, particularly for London offices. But, actually the next biggest, I think, purchaser in the market is continental Europe. So, the Europeans taking the benefit of a bit of a currency play for them. But we also have a lot of UK investors very active in the market, and where we have been selling, we've sold to the whole array of, really just about everybody, including local authorities who are, very active in the UK market at the moment and paying some big prices.
Ainslie, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.